Welcome to Coffee and Crypto with Lee and Jimmy. I am Lee Reiners, joined as always by the one and only Jimmy Lenz. Jimmy, good morning, sir.
Good morning, Lee. How are you?
I'm doing well. How are you? A busy week for you, right?
Busy week. Insight.
Yeah, tell us more.
The Encino annual conference took place, and Encino, for those of you who don't know, have service credit unions and banks across the globe. They
hmm
have hundreds of attendees were there. We also had the opportunity to take a number of fintech students to the conference.
Nice. Very cool.
So they got to see all the vendors to the industry and meet a lot of executives. And the first day was kind of cool because it was an executive session. So
hmm
it was just executives from banks and credit unions there. And
Okay.
students got to kind of mix it up with a lot of those folks and talk to them about what they're doing and what they're thinking.
Nice.
And I haven't had a chance to really debrief with the students,
Yeah,
but I mean, they were overwhelmed. I think it's the first time they've ever been to something like that. And so,
sure.
I mean, you know what those conferences are like. They're huge and all the vendors are there. And
Oh, yeah.
it's not digital assets at Duke.
Well, we
uh,
pride ourselves on having no vendors.
no vendors. So it was very different in that
Yeah.
regard. But it was, I did a number of sessions on digital assets, on
Okay.
different aspects of digital assets. And I mean, literally hundreds of attendees to my sessions. And the other cool thing about it was two of the sessions I did with Jed Meyer, the CEO of St. Cloud Federal Credit Union,
Yeah,
from
we've
up
talked
your
about
way.
them.
Well, an hour
hmm
north of your way, but
Yeah, yeah.
um, it was. But it's the first credit union to launch their own stablecoin, and it was really interesting hearing his take on it. And we talked a lot about the deposit flight that banks
Yeah.
and credit unions are seeing, and it's
So what were they
huge.
saying on that
And
issue?
for those people that are monitoring it, 3 to 5% they're seeing deposits leaving their platform. Now they don't all know that they're going to crypto exchanges or someplace like
hmm
that,
Yeah.
but for those who are monitoring it, and this reflects what we saw in that study, earlier in the spring with the community banks. For those who are monitoring it, a good bit of that flight is going to crypto exchanges, going to digital assets, stable coins in particular. So there's
hmm
a big interest, and so we got a lot of feedback, million questions. I mean, so many questions. Jed and I couldn't get out of the
So
sessions.
that so to be clear, because I think this is an important point, because a lot of this conversation has been speculative thus far. You heard directly from bank and credit union executives who were saying, we are seeing deposits leave our institutions and go into crypto platforms.
Yep. They are definitely seeing that. And I mean, Jed was very honest about it. He said they've been monitoring it for now they're not giant. They're around 500 billion or 500 million. He wishes
Sure.
500 billion, 500 million, but they're
Yeah,
in
that
St. Cloud,
that would be
Minnesota.
for a credit
Uh,
union. That would be massive.
yeah,
Yeah,
yeah, 500 million.
500 million,
And
still good size.
he was saying they've been monitoring it for several years. And about 3 years ago, they saw $1 million leave. 2 years ago, they saw $5 million leave. Last year, they saw $15 million leave. And they were like,
hmm
we have to do something. And so they've actually come up with a solution. And he said that they're actually starting to see inflows of new accounts and things like that, and people opening up accounts that want to be in the space.
So, what was their solution?
So they've actually developed an in-house solution with what's called a CUSO, a credit union service organization, that allows them to, and part of this is state too, but that allows them to custody assets and to provide access to assets, including on ramps and off ramps to crypto assets. So they can actually hold those assets. They can use them for collateral for loans. They can do all kinds of, basically anything with all of the banking services or credit union services that are available.
Gotcha.
And then, of course, they have
Okay.
their own stablecoin. And their stablecoin, it was interesting. They didn't, when with the write up that we saw a couple of months ago, we didn't really know what the driver was. We thought, is this like a vanity project? What? And it was a project that they did with two food co ops. And
Really?
yeah, the co-ops, he was asking, they were interested in using digital assets. And he said, well, do you guys want to use, one of the big, circles or something like that? And they said, no, we want our own. You're a co-op, we're a co-op. can we create our own stablecoin? And so they did. But that was what it was originally meant for,
Why
is to
would a food? So
facilitate
why
that.
was a food co-op interested in this?
They were interested in keeping money in the economy, keeping the economics somewhat local, and so this was their solution to doing that, was to using this kind of solution, and apparently it's working because it's been adopted by a lot of other merchants in the area.
So what are they? Okay, what is a food co-op using the stablecoin for? Like, what are they? It's not the customers of the
Yeah,
co-op.
yeah, it's for the
Oh, so
customers of the
it's like
co-op.
okay, so it's like it's almost like like native co-op currency,
It is.
basically.
That's exactly what it is. It's a
Okay,
native currency. And it's being facilitated by a credit union. So you have the on
gotcha.
ramps and off ramps that are easy for folks to use.
So it's
And,
almost like the old like Macy's, like a Macy's card type of deal, where it's like you use it
you
at
know,
just one store. Yeah,
it's funny. That's the analogy that Jed used. Was it was like the old some of the old
yeah.
store cards and things like that. But
Hmm.
this is a little bit different, I think, because it's not just one store, right? You can use it throughout anybody who adopts it. But it is very, I would say, community centric.
What chain is it on?
Trying to think what chain. It might be. I'm not sure. I can't remember. I know he told
Gotcha.
me, but
Okay,
it was
that's
one of the
fascinating.
it was one of the big chains. It might be EVM, but I'm not sure. I think I can't remember. I'll have to check and see, but I think it's EVM.
Gotcha. Okay, well, it sounds like a great, fascinating conversations. You know.
It really was. And the number of people that came up to us afterwards and said, we knew that we had to do this. We didn't realize that we needed, and they all knew that they needed to do it quickly. They all know that
Yeah,
they need to
yeah.
do something. Yeah. So just
So let me
sitting and
ask you
letting
where.
it go is not an option.
No, you can't. You can't be sitting on your hands in this environment for sure. Not that anyone has perfect foresight here, but I just think being stationary is not an option right now. You
Oh,
have to
absolutely
be.
not.
You have to have multiple irons in the fire, so to speak. So you're kind of prepared for however this shakes out. Now, I would imagine, Jimmy, that some of the folks in attendance there were closely following. Well, maybe not closely following, but at least following what was going on in DC with
Oh,
respect to the Clarity Act, right? Was that a topic of conversation?
that was a topic of conversation in everyone that we had. We talked about
Yeah.
clarity. We talked about genius. Just coincidentally, the governor in Wisconsin signed signed a large crypto bill. Part of it was around custody and things like that for the
Yeah.
state. Um, and that was something that had been a couple of years in the making. But yeah, clarity. Everybody was talking about. What's going to happen. And the interesting thing was when I said, "Hey, folks, if you think a change in yield posture around stablecoins is going to make a difference, it's not going to." Nobody was surprised by that.
Yeah.
Nobody was surprised. Nobody thought that, oh, if the clarity bill bans direct yield on stablecoin, everybody thought two things. One, these guys are really smart and they're going to find a way around it. And when I brought up, and most people didn't realize how many tokenized money market funds there are, but when I brought up the idea of tokenized money market funds, everybody was like, "Yeah, we've seen this story before,"
Yeah.
and it
Yeah.
didn't work out well for any of us.
Yeah, that's interesting that they said that and they've been following this closely and are kind of have a realist take on it. Obviously, you and I have been talking in the last couple episodes about the fight over third party rewards. I mean, the
Yep.
banking industry really at the last minute did an aggressive push with their membership. I think the ABA sent out. President of the ABA sent out an email to all their members, encouraging their members to get in touch with their representatives and asking them to close this, their senators, and asking them to close this so-called loophole. So I'm sure a lot of the folks at the conference there were on the receiving end of that email, maybe even reached out. Obviously, Jimmy, yesterday we had a big milestone because Clarity, as expected, did pass out of the Senate Banking Committee, or a version of Clarity, right?
Right, right.
Uh,
A version.
a version of Clarity. Now,
But it
obviously,
did have bipartisan support, which I think is really
it had
important.
two. Yeah, yeah. So that's definitely a big deal because going into it, I think that was the big question, which was would any Democrats vote this out of committee? And two ended up doing so. So specifically, Ruben Gallego from Arizona, Angela Alsobrooks from Maryland did vote the bill out of committee. Now, both of them did add a note of caution saying that that did not guarantee their vote on the Senate floor, right,
Right.
when the full package came up. So there are definitely things that they want to see addressed going forward before they vote to pass a full package. And namely, that's around the ethics provisions, and I think that's going to be kind of the big fight going forward. Nonetheless, it's a big milestone. Again, I think you and I expected that to happen.
Yep.
But as we also said last week, right, this was just one hurdle, and there are many hurdles remaining. Probably the biggest, as we noted last week, again, was the compressed congressional calendar in an election year,
Hmm.
right? Um, but nonetheless, a big win for crypto.
Well,
So,
I think it goes beyond crypto. I think
uh,
it certainly is a big win for crypto, but I think it goes beyond that, because my take is this was, and so I'm with banks and credit unions. These are the most
yeah,
regulated industries there are, right? And the the fact that they were receiving this guidance, it was very there were a lot of people that were very attuned to it. There were a lot of people that I think were looking at this, and this is, I mean, these are outside of the crypto industry, but they were looking very, very closely. I mean, everybody recognizes how
yeah.
germane this has become to the financial infrastructure in the U.S. I mean, the fact that we're seeing deposits move at a rate of 3%, 4%, 5%.
Sure, sure.
I mean, that's significant here in the U.S.
Yeah, no, that's fair. It certainly is. So I'm looking at Kalshi right now, and they have the odds at 70% that crypto market structure legislation becomes law before the end of the year. They have it at 64% before August. That seems high to me, but who am I to question the wisdom of crowds here, right? But look,
As we said before, this is a biased crowd, folks.
yeah, I think the people, yeah, that are participating on Kalshi are probably also more supportive of crypto, and so this may be some wishful thinking. I don't know, but we'll see, right? I mean, I think again, back to the hurdles, Jimmy. Now you're going to have a number of senators who heretofore have not been thinking about crypto, paying attention to crypto. Now, for the first time, have to confront the numerous thorny issues that you and I have been talking about forever on this show. Right,
Right.
not just the third-party rewards issue, which the banks have already signaled they are going to, make this a huge fight. They're going to ramp up their lobbying, and of course, the banks have had relationships with Senate offices forever, right? And so,
Yep.
again, you're going to have a number of senators who haven't really thought about crypto, probably don't really care about it because it's not an issue that their constituents, by and large, care about. Who are going to be thinking about this? Are going to be hearing from the banks. Now we have the DeFi stuff, and law enforcement has raised some concerns. Some law enforcement groups have raised some concerns, and then the ethics thing. And look, I don't know how that ethics thing gets resolved, Jimmy, because look, Donald Trump is not going to sign any bill that limits his ability to make money whatsoever. Right? That's
Yeah.
just a fact, folks. I don't
Yeah.
know. I don't know what else to tell you. And for that's just a non-starter for a lot of Democrats. I don't know. Every Democrat, but at least a lot of them, the majority of them, are simply not going to vote for a bill that makes Donald Trump wealthier, which this would. So we'll see. We'll see. Never underestimate the power of money, though. And the
No, I
crypto
mean,
industry has a lot of it, and has spent a lot of it, and it's gotten the bill this far. So it's hard to handicap here, Jimmy. Certainly a milestone, though, on the march here, and we'll be monitoring it closely, obviously.
yeah, we have to obviously watch it closely, and we will be following, in particular, any markups and things like that. There were, like anything like this, there was a lot of stuff tacked onto it, and we'll see what happens with all of those things. It really is strange if for anybody who is a student of policy and things like that to look at bills or look at laws and see what exactly people attach to them. It's crazy sometimes. I mean, it
Yeah.
really is. You could, I mean, I know people have written papers and things like that on it, but you really could write, I mean, a lot on this, and people would, just throw up their hands. It's like, what the heck? How can this happen? But as you well know, it does.
Yeah, the amendment process, and there was a big fight over, Senator Tim Scott, the chair of the banking committee, disallowed a number of amendments for procedural grounds. And I'm not certainly a Senate rules expert by any stretch here. And look, it's not that's not our job, right, to follow that. I kind of
Right.
look at the text when it comes out, and then I'll look at the text, going forward to see sort of what made it in. I mean, I've had a chance to review it yet, but I have zero interest in following, this amendment got voted up or down or whatever. I'll just, read the text when it's finished, basically. But yeah, a lot of procedural posturing yesterday. All right, Jimmy. Well, in the meantime, right, markets are doing what markets are doing, evolving. They're not waiting on legislation or Congress, right? I
Yep.
mean, we talk about this every
Things are
week.
moving quick.
Things are moving quick, and Bloomberg had a great article earlier this week, Jimmy, on the repo market.
Yeah,
And basically tokenized repo, right? We talked about tokenization a lot.
we do.
And really, one of the areas where you're seeing sort of the fastest growth, right, demonstrated use cases is in the repo market, Jimmy.
Yep.
I think most of our listeners are going to be familiar with the repo market, but maybe for those who aren't, Jimmy, just give a quick rundown on the significance of just repo funding in general before we get into the tokenization aspect.
Yeah, so repos are used in by all kinds of companies, and it's basically a way to put short-term cash to work. It's a they vary in kind of time frames. Every repo is kind of a custom. At the end of the day,
Yeah.
it's a custom agreement. But for most folks, when we're talking about repos and we're talking about how they're used, it's really short, very very short term borrowing, and it's a way to borrow and lend with government securities usually as collateral
Yeah.
behind
So
it.
repurchase agreement, just to clarify for those who aren't familiar, repos is short for a repurchase agreement.
Repurchase agreement, yeah. And so you're basically these agreements, these borrowing agreements, are fairly short term, and you kind of make a little bit of money on this, a little bit of interest on this over this short period of time on the spread. They're called reverse repurchase agreements or repo agreements because there is an agreement that you unwind this at the end of the period. So
Hmm.
you have kind of both sides of the trade. If you think about a repo as a trade, which most people don't think about it that way anymore, but it is. But you have an entry point and an exit point, and so
Yeah.
so these are kind of guaranteed. Central banks use them, or central banks are a stop for them sometimes because these are so frequently used that if this market for some reason slows down or locks up a little bit, central banks will actually step in and facilitate repos,
Yeah.
and they do this on a fairly regular basis just to keep kind of the money supply moving because people, when I say people, companies have come to depend on these for short-term funds as a source of funds to fund all kinds of just daily activity type things.
Yeah, I mean, the importance of the repo market cannot be overstated, Jimmy. I mean,
No, it's huge.
it is essentially how broker dealers fund themselves,
Yeah,
right? So it's how
as
they
well
fund.
as all kinds of other companies. Yeah.
Yeah, other companies as well, but financial institutions, in particular broker dealers, fund themselves largely through repo, as you said, overnight. Treasury securities as collateral. Counterparties, right? The ones sort of providing the liquidity are generally asset managers, so your Fidelities, your Vanguards of the world, right? Folks who are sitting on a lot of cash. And this is really the plumbing. I mean, you're talking about the plumbing. If we're going to use analogies, the plumbing, the circulatory system, right, if you will, of financial markets. And look, there's a lot of technical aspects that go into it. There's, because it's overnight, these things unwind.
Yep.
You have to have right. You have to have, the collateral, right? Because the whole premise is that if the counterparty defaults, right, you can then seize the collateral and sell it, right? And so for all these reasons, Jimmy, it actually makes a lot of sense for blockchain and tokenization to be used. If you can have a shared platform, right, where the funding, the cash leg, and the collateral leg are sort of all on chain, visible, moving and settling in real time, that provides a certain efficiency gain, right?
Oh, absolutely. It's And these kinds of things. It's funny. So during the conference, I actually asked asked Jed from St. Cloud Federal Credit Union. I said, this idea of 24/7. This is not something that certainly banks and a lot of banks and credit unions really operate 24/7. People think they do, but they really don't, because they still operate on batch processes and stuff like that. And so I asked him, I said, like, how challenging is this environment going to be, for them? And he's like, it's going to be challenging. And I said, and so that's just on one side of the equation. I said, what about the borrowing side of the equation? When somebody wants to borrow money from you for 12 hours, he's like, we're thinking about it, and it's going to be really hard. But there are other places that will do this now. So that's the thing, is it's not like, banks, typically investment banks, credit unions haven't really had a whole hell of a lot of competition in this space.
Yeah.
But now they do. In fact, and I don't know, I haven't been on Coinbase today, but I know last week, if you went to Coinbase, the banner at the top of their page, we now make home loans.
Oh, yeah, we talked about that, that partnership they had. Yeah, so just to, again, make this more clear for folks in terms of how the blockchain-based repo works, this is straight from the Bloomberg article. Again, we always post links in the show notes. But a borrower can request funding through a digital interface. Once the lender agrees, the cash and collateral are represented as tokens. Both sides approve. The transaction is recorded on a blockchain for as long as the terms are set. And then, importantly, Jimmie, trades can be made at any time of the day, including outside traditional business hours, which is important, of course, when the counterparties are in different time zones, right? That's a big deal here. So look, obviously a lot of benefits. Downsides, Jimmie, no fudge factors, right? It's all in the code. It's all in the code. And there's a great quote in the article towards the end from Sandy Call, who is head of investment innovation at Franklin Templeton. And she says, I'm guessing Sandy could also be a man. She says, there's no fudging, right? It's written into the code. I can't call someone up and say, I need 5 more minutes.
Yeah.
Right.
Yeah. I mean, and that's, it's funny. When I was reading this and I was thinking about it, do you remember old ISDA agreements? I mean, people still use ISDA agreements.
I mean, yeah, obviously I'm familiar with them.
Freaking ISDA agreements. I mean, there were instances where people were using those for, you could use them for repos, but you use them for other things too. And they would, the trade would completely settle and unwind before the agreement was ever finalized, because, oh, I forgot to put this in. Oh, wait, that should be 7%, not 6 and 8. It was crazy how often. I mean, it was a large percentage of the times ISDA agreements were never signed before the trade was already finished. It was already unwound.
Yeah. It's anyway, well, let's move on, Jimmie. Speaking with tokenization,
you know what's going to change that is agentic AI. Agents using agents to do these kinds of things is going to, because you no longer have people in the equation, right? You no longer have the person that wrote 0.7% instead of 7.0%. Those kinds of things. I think that this was a huge topic. I mean, because for those of you who know Encino, they do a lot of stuff. They have already a lot of agentic stuff that they've rolled out to customers, and customers are using. They were actually giving tutorials on kind of the next generation of it. So there was like tons of stuff on that. But one of the things that I saw, and these were like huge audiences. I mean, this is assumed. There is no going back. This is the next. And I think when we have, agents that are actually facilitating these kinds of things, those mistakes just are going to, I mean, they're not going to disappear. The mistakes will still be there, but I think they'll decrease in a huge way. And
really?
I think so. Yeah, I think so. And I think it goes right into this. So when people remember,
can you program every contingency?
Yeah, you can program basically.
Really?
I think so.
I don't know, man.
I think the agents will actually be able to find those contingencies.
Maybe there'll be like a ISDA agent, right? Like disputes can be like, there'll be an agent to mediate disputes between agents.
Yeah, I mean, because mistakes will still happen, but I think that these kinds of things won't occur. The agent won't make the trade until it's correct.
Yeah.
So that 5 more minutes type
thing. Fascinating. Yeah. What a world. All right, Jimmie. Well, let's talk about our friends at DTCC.
Yeah.
Right. Speaking of tokenization, so we covered this back in December
Hmm.
when they announced the launch of their tokenization pilot, right? Which is initially going to cover, I think, the 1,000 largest stocks. So it's going to cover the constituents of the Russell 1,000, so largest publicly traded U.S. companies.
Right.
And they were going to tokenize those stocks to be completely compatible with existing regulations, including Reg NMS, the National Market System.
Yep.
And this earlier this month, they announced that they are proceeding as planned.
Hmm.
So DTCC plans to facilitate the initial limited production trades of real-world assets using tokenized using DTC's tokenization service in July 2026. And then full launch in October 2026, Jimmy.
Yeah.
When I'm looking at the members of the working group they
It's
have,
kind of
I
like the
mean,
who's who, isn't
oh my
it?
gosh, it's the who's who of TradFi, of
Yeah.
crypto. I mean, it's
Yeah.
every, it's Robinhood, it's Goldman, it's BlackRock,
Citadel,
Citadel,
BitGo, Bitwave. I mean,
Ondo,
TD.
Find
It's
Ondo,
yeah.
Virtu, like you said, BitGo, Anchorage Digital.
I mean,
They
Virtu.
got
These are. I mean, you're right.
JP
It
Morgan, yeah,
spans the gamut of. I mean, everybody from Charles Schwab to Ondo Finance. I mean, there's like a
yeah,
lot of firms that have that are part of this. And I love to say, I mean, our students actually have been part of some of these
that's
projects
cool.
in
That's really
moving
cool.
in this direction, which is really, really cool. But the fintech students have been doing a lot of work in the with the DTCC on some of their projects and things like that
Nice,
in this
nice.
space. So it's cool to see it actually come to fruition. Were you surprised by the timeline?
No, you thought it was like ambitious?
I
I
mean,
don't know. They've been working on this for a
they've been working
while.
on it for a while.
They also did their great, they last year they did their great collateral experiment.
Hmm.
And a few weeks ago they gave an update on that. So I mean, they got the people, they got they got the resources in place here. They got the no action relief, right, that they requested from the SEC.
Yep.
They're working with NYSE, and they're ready to go, man.
They do seem to be ready to go. I'm looking forward to one hearing a lot more about it. But I mean, they've put a ton of resources in this. They brought some
Yeah.
great people on board to work in this. They've talked about it at Digital Assets at Duke, and we've had the
Mm-hmm.
opportunity to have several of the folks from DTCC there talking about some of these things. I'm
It's
really jazzed.
the innovator's dilemma, right? They're trying to
It is.
address the innovator's dilemma.
I mean, because let's face it, they see the writing on the wall, and they've
Yeah.
been pretty active in the DLT space since, almost since its inception. I mean, they saw the
Mm-hmm.
writing on the wall, and hey, kudos to them for not sitting back, for taking action and moving forward in I think, a pretty big way.
Yeah, I think, look, this is clearly one model of tokenization, and it
Yes.
remains to be seen if this is the model that will work or bring sort of the most efficiencies or will be sort of most compatible with whatever the regulatory requirements are in place. Because,
Right.
look, there's another model where it's a native token. Basically, the blockchain is the central securities depository, right? In
Yep.
this case, we talked about it when they announced the pilot. Securities will still be issued in sort of the current traditional format, right? In essence, what will happen then is DTCC will then sort of lock up, right, that traditional security in the current digital format and issue then a token
Yep.
that represents, right? But it'll still have all the same entitlements, as they've been very clear about. So it'll still have all the same legal rights. And then participants will be able to then settle their trades in using the token
Yep.
version. Now, there's, like I said, there's other versions where you just skip DTC altogether, and
And
issue the.
that actually is a good intro into kind of the next thing I wanted to talk about, which was, you
Go
sent me
for it.
the link on the SEC remarks.
Yeah, exactly. So
right?
let's talk about that. That had to be music to your ears. I mean,
It,
you sometimes when I read Paul Atkins speeches, I'm like,
you think
did
that he
Jimmy
must take? He
did
must be listening to me, right?
I'm thinking you're his secret speechwriter, okay? This is like, or maybe speaking of agents, maybe he has just had his staff copy all of your speeches and talks, right? Gone on YouTube, right? Everything, this podcast, whatever, and put that in a AI, right? And they created like
And
Jimmy AI,
here, you put out
and
something
it's
that
like,
Jimmie would say.
yeah, exactly. Put out something, Jimmy. Write this in the voice of Jimmy Lenz. Um,
It does seem a little bit like that. The whole
I'm
opening
so
around American
yeah,
innovation. I
I'm
was
telling
when
you,
I was
man.
reading through it, I was thinking, I think I've said this thing someplace before, almost exactly the same words.
So
Um,
I'm
it
telling you,
was,
it's. I think I'm reading the words of Jimmy Lenz here. So this is a speech that SEC Chairman Paul Atkins gave on May 8th.
yep,
It was on a couple things. It was a short speech. It was on AI and agentic finance, and I think the more pertinent part was the section on on-chain financial markets.
yeah,
On the AI piece, actually, I disagree with Paul Atkins on pretty much everything.
right.
I thought everything he said on AI made perfect sense to me.
It was
Um,
pretty. It was kind of. He was just reiterating a lot of what's kind of already
yeah, I mean,
in motion,
he
right?
put it.
It
Yeah,
was
and he's
good.
like,
It was good.
yeah, I mean, he said what you said before, which is like, look, AI is just the kind of the late. We've had machine learning, right? I
Yeah,
mean, we tend to think of AI as like this sort of thing that's just sort of dropped from outer space, but it's the continuation of things that have been going on in a while. And he's like, look, to the extent that market participants are using AI, we're going to hold them accountable for the impacts of that,
sure.
right? Which is like, yeah, duh.
Well,
But
yeah, I
anyway,
mean, it's happened. It's happened. We've seen for better and worse. I mean, and everybody thinks about the worst things because those are the ones that we see. Blow ups that have happened. Different sorts of machine learning algorithms and things like that
mhm,
that have modeling that has gone awry, and it resulted in big losses, or all kinds of
yeah.
things, market movements that are giant, things like that. So yeah, I mean, it's so you have to call it out, right? And if you're going to be
Yeah.
if you're going to use this stuff, you got to be responsible for it.
Yeah, I mean, so the key line here is he says, that means firms will be responsible for the outcomes of the tools they deploy and for informing investors of how those tools are used. And then he goes, for our part at the SEC, will not dictate which models firms must use, nor will we cement today's technology as standards for tomorrow. Right?
Yeah.
Okay, that's fine. So on-chain financial markets, he has a whole section on on-chain financial markets,
Yep.
Jimmy. And the key line there
Well, he has,
is
he outlines, he does a whole section, but he outlines three very specific points,
yeah,
right?
so he's basically saying, look, historically, SEC market regulation buckets participants into these distinct categories, right? Namely, brokers or dealers, exchanges, clearing agencies, and transfer agents. But then he goes on to say, software applications today do not always organize themselves neatly along those categorical lines, a point that you make quite frequently, Jimmy.
Yep.
So he goes on to say a single protocol can execute a trade, manage collateral, route liquidity, execute trading strategy through vaults. We've talked about vaults and settle the transaction all within a unified automated system, often within seconds. So then he goes on to say, look, I think we're going to have to do some notice and comment rulemaking to incorporate these developments and rethink what it means to be a broker, what it means to be a dealer, what it means to be an exchange, what it means to be a clearing agency in, this on-chain market environment,
On-chain world, yeah. And
you know?
I mean, you and I have talked about it a little bit. We've talked about it offline quite a bit. It really is different because I mean, you see in crypto markets guys who are market makers, right? They serve that function as a market maker. I mean, they advertise
Yeah.
themselves as market makers. Are they actually licensed market makers in the
No.
sense of the? No, they're not. But are they
Wintermute. Is Wintermute licensed?
yeah, but are they doing exactly the same thing? Yeah, they are. Um, it's
Yeah.
so. But and the thing is because this is borderless. I mean, those kinds of things are out there. So I whether you agree with it, whether you don't agree with it, it's happening. And so I think him calling out these different, these all three points, I think were somebody had to call them out. Somebody had to say it. I know the last administration was like, no, we're just not going to allow anything. But they never really called
Yeah.
out, in this way. And so I like the fact he broke it down into, market participants, what a broker dealer is, or, how we think about broker dealers. And then the clearing agency part, which kind of goes to our last comments
Hmm.
around DTCC. I mean, it had to be done. I would have, had I been him, I probably would have gone into a bit more detail than he went. But I'm sure that's coming. So,
Yeah, I mean, I think this is just teeing up that
right.
additional work, right? But time is ticking if he wants to do a rulemaking here. Yeah, I mean, he does say that we should remember on-chain market structures are often hybrid in nature, combining elements of what are often referred to as traditional and decentralized finance. And I think that's my critique, because a lot of this speech and a lot of frankly crypto policy in general in DC right now is like sort of premised on what the industry says or what the industry claims how this technology works, and not
Right.
actually like what's transpiring. Because like when you look under the hood here, there's still a lot of intermediaries. There's firms involved, there's people involved. This whole notion that oh, these things are, it's just a smart contract, and someone, some developer somewhere just put a smart contract on Ethereum and then walked away, and now all this stuff is just happening automatically, is complete bunk, right? I mean,
Yeah.
we see the stories all the time, right, about how there's actually firms involved, people involved, and generally that reveals itself when something goes wrong, right? And so to think that these, that this stuff doesn't require regulation, or that you can't hold anyone accountable, is just denying the reality of how these things work in practice, right? So there's a big
Right.
difference between in practice and in theory here, and the SEC seems to be focused too much on the sort of the theory of how these things work, and not the actual reality of how they work, in my opinion. Okay.
Yeah, yeah. I think that taking the step back and saying, okay, because this isn't theory anymore. I mean, we've been doing this now for years, and we've heard, from the last administration. I mean, they certainly had comments about it, but this has been going on for years, and so I think if they want to, it's kind of a question of relevance to some extent. I mean, if they want to stay relevant, if they want to. If the SEC wants to kind of continue its oversight, or what it sees as its oversight into these emerging markets, I think they have to be very vocal about it. I think they have to be very upfront about it. It's not you can't do anything. Well, it's going to be a big FU. We're going to do what we want. And that's the last administration saw that, right? I mean, even if it meant, we'll leave and we'll just go offshore,
Yeah.
it's not going to stop. And the other thing about this, I think that's really important is,
Markets don't stop, innovation doesn't stop.
it doesn't. And well, the thing that's really important is, so, I mean, we've talked about this before, if you look at the global market cap, the United States is 40% of the world's market cap. I mean, we are the engine of the world. I
We're
mean, there's no
rocking.
doubt about it. Nobody's going to question that. The rest of the world has 60% distributed all over the place. I think we want to stay in that, in that position. We don't want to, and we're kind of, I think it's ours to lose at this point, right? The United States is looked to for a lot of things. If you look at stable coins, what are the vast majority of stable coins are denominated in USD? And it's ours to lose. So why would we want to drive this stuff offshore? This was, I think, a nice opening. I would like to see, obviously more, and basically they left it open, a lot more is to come.
Do you have time for one more story? Because I want to pick your brain on that last
Yeah.
point. On
Yeah.
okay, because so this Hyperliquid. So kind of the point about offshore and innovation happening and whatnot. I think we've talked about Hyperliquid before, but not
Yeah,
a
probably a
lot.
little bit. Probably a little bit. Yeah.
So and again, we have a smart audience who are probably familiar with Hyperliquid, but it has quickly become one of the biggest names in crypto, Jimmy,
Yeah.
and I don't think that has been properly understood and appreciated by those that are sort of not immersed in the crypto world, and honestly by me too, right? Because and you and I are busy and we have a million things going on, so it's hard for us to actually stay on top of everything happening in
Yeah.
crypto. But for those who aren't familiar, Hyperliquid is a DEX, so it's a decentralized exchange. And really their main product is perps, perpetual futures, which we
Yeah.
have talked a lot about.
Which we've talked a ton about those.
So high leverage perpetual futures. But they are handling massive amounts of volume, Jimmy,
Yeah.
massive amounts of volume. So I'm looking here. So in 2025, Hyperliquid recorded between 2.6 and 3 trillion in notional volume. Coinbase, by comparison, 1.4 trillion in volume, right?
Yeah.
So there's more activity happening on Hyperliquid than the largest exchange in the U.S. Now they have a native token, the Hype token.
Yep.
That has gone up significantly over the past year, right? $46. So this is definitely a platform to keep an eye on, Jimmy. And I think it's a helpful sort of reference point as we debate some of these policy proposals, like Atkins that he was just talking about. We can sort of apply that to Hyperliquid, right? To
Right.
sort of make it concrete. Okay, so here's a story that came out. I sent it to you.
Yeah.
I'm still trying to make heads and tails of it. Maybe you can sort me out here a little bit. So Coinbase puts out this press release saying, and this was just yesterday, okay,
Yeah.
stating that Coinbase and Hyperliquid aligning markets on Hyperliquid to USDC. Okay, so it says Coinbase is expanding support for on-chain markets by becoming the official treasury deployer of USDC on Hyperliquid.
Right.
As part of this transition, Native Markets has agreed to terms granting Coinbase the right to purchase the USDH brand assets. Now, USDH is a stable coin issued by Native Markets, and USDH was essentially the stable coin that was used on Hyperliquid,
Right.
right? It was sort
Right.
of the base quote
To
on
facilitate. Yeah.
to facilitate the trading. So I guess Coinbase has effectively bought Native Markets or bought the USDH brand, and they're going to sort of phase out USDH with USDC. So
Right.
in essence, USDC is going to become sort of the exclusive stable coin on
The
Hyperliquid.
frame of reference. Yeah.
Frame of reference. Now, here's the part that I'm a little confused on, which is this align quote asset. So the way it worked was native markets and with the USDH stablecoin, the yield, the reserve income was not going to native markets. Instead, it was going back into Hyperliquid. Basically, it was that the rewards were being shared, the financial rewards were being shared with the protocol, right? So
Right.
lowering trading fees, things like that. Um, I guess that's still happening now under USDC. I mean, Coinbase claiming it is, but Coinbase is not the issuer of USDC, and so this is where I'm confused, Jimmy. Because let me see if I can find the relevant quote here, because someone posted it on Twitter, and I couldn't agree more. So they say, okay, competing announcements from Coinbase and Circle, because Circle also put out their own statement. Neither mention each other in their blogs. Both claim to be the AQA deployers, right? So that's the aligned quote asset model I talked about.
Right.
Also confused how Coinbase will share yield with Hyperliquid, why Circle would allow it, and why Circle didn't just buy USDH themselves. So these are questions. This struck me when I
So
read it as a big
yeah.
deal, but I'm like, what the hell is going on here? I got to study this. Maybe our listeners who know more can kind of fill me in and fill us in. But does this
I
make
mean, I
sense to
have
you?
to
What's
think
happening?
that I have to think that Circle isn't they're not set up to do something like this, right? This is basically being a facilitating very similar to the way. So I would think about it more like the firms that facilitate things like ETFs. Okay, the exchange of ETFs, right? Because ETFs can be created and also taken out, right? So you can make an ETF, you can take it out of circulation, right? And because it has an underlying, I
Hmm.
see it more in that kind of vein. I don't know that Circle has the capabilities, nor do they want to become that kind of a company. Maybe they do. I don't know. I don't
Yeah.
have any inside knowledge there, but I would think that Coinbase is already set up for those kinds of activities. I wouldn't think that Circle could facilitate those kinds of activities. And I did notice that neither one mentioned the other one in their stories, but in the in the story that you sent me, Coinbase was called out, obviously.
Yeah. Well, it's a Coinbase press release I
Well,
sent
yeah.
you. Yeah. Yeah, this is something that I'm going to study a little bit more. I'm just really confused on. I think the broader significance, though, Jimmy, is you have the largest American crypto exchange, Coinbase, for the first time, partnering in a meaningful way with Hyperliquid, right?
Hyperliquid, yeah.
This is kind of back to the innovator's dilemma, kind of getting close to your competitor, right? If you can't beat them, join them, type of
Yeah.
deal. Is that
Well,
what might be
you mean
happening
you mean
here?
as far as the perps themselves go?
Well, yeah, I mean, just partnering with Hyperliquid, right?
Yeah.
I mean, Hyperliquid is a competitor, and you know,
I guess,
um,
yeah. Yeah,
you know,
they are.
there's more volume, like I said, happening on Hyperliquid. The user experience on Hyperliquid is
Well,
very
there is
good.
more volume, but let's face it, volume in the derivative space is a little bit different than volume,
Yeah,
on an
fair.
exchange.
This is true. This is true. All right. Well, this is a fascinating story. I'm going to keep
Yeah,
my eye on this. We're going to cover future developments of this on Coffee and Crypto. So, Jimmy, a lot of fun as always. Hope you enjoy
always.
this beautiful. It's going to be hot. It's going to be toasty down here this weekend.
It is going to be warm this weekend. I'm looking forward to. I'm having some of the professors over at the house for dinner tomorrow, which will be
Very
fun.
nice. Very nice.
Yeah,
All
yeah.
right.
Well, it's
All
end
right.
of the
Well,
semester, so we're going to do it. Have a great weekend,
enjoy.
Lee. Have fun with the boys.
I will. Talk to you next week.
All right.